Hello, everyone, and welcome back to the next episode of Stream Time Sports. My name is Chris Stone, the community lead, joined as always by our CEO, Nick Meacham. Now, Nick, this weekend, my West Ham United were victims of a VAR, video-assisted refereeing controversy. Now, we won't get into the ins and outs of that. There's enough Arsenal fans I've had to argue with. But the Premier League have introduced VAR. The NFL has obviously for a long time had its challenge system, although it's gone through some changes. If you remember the 1 year they let them decide they could challenge pass interferences, and they scrapped that after a year. Tennis and cricket have obviously been using things like Hawkeye for some time with different decisions. Major League Baseball's incorporated the automatic balls and strike system this year. So seeing more of it. But Nick, where do you fall in terms of how much we allow technology to officiate sports?
Oh, that's a really good question. I mean, whenever it disrupts the play as much as it has in football, it really does has taken some of the emotion out of goals being scored and things happening in the game. But it is a more accurate result. It's a really tricky conundrum. I think when it becomes more frictionless, like it has in certain other sports where this pace of decisions is getting quicker and quicker, like in tennis, for example, the decision is pretty quick now compared to what it used to be. And I think, the idea of having a challenge for a coach to use rather than every decision being... that I think feels like a nicer way, because inevitably it's okay that decisions are... it's inevitable that decisions are go for and against at times, but as long as those coaches had the chance to jump in when they really believe something else, then I think that might make it a bit more smooth and seamless rather than the uncertainty that happens in football right now with decision making. Even just like checking the offside still takes a long time for it, and then it comes down to millimeters, and everyone's umming and ahhing about its validity after the fact, even when it's supposed to be so scientific and so rock solid. So I think it has to be as seamless as possible. And cricket's been doing it for, gosh, they were the first really that I can think of doing it and leaning into it properly. But even they had what was called like umpire's call, would they call it? Whereas the margin of error is there's like three things they offered in cricket. It's like in LBW, so the leg before wicket basically hits the pads without the bat hitting the ball. Has to pitch in line and then hit in line, and then they have to decide whether it's going to go on to hit the stumps. And if that's the umpire's call, but if it's too close to call even, and now that the technology has gotten better, some of it looks ridiculous where the ball is sitting 99% away from the stumps, but they're like, oh, that's out. It just looks a bit random. But I don't know. I'm for it to an extent, and I think it's added a lot to the game. And hasn't it done something in baseball as well that's been really good?
It's great. I think so. Whenever there's change, people don't like change, right, Nick? We always get people up in arms. I think baseball has done it almost seamlessly. And I think it's been a good part of it. So it's the automatic ball strike. What's really interesting about this, Nick, the fun fact. So with the new automatic ball strike system, you may not know this, Nick, the strike zone is from your chest to your knees at your standing height. It's not about your stance. So people show these little clips of little kids where they crouch down. That's not where your strike zone is. Your strike zone is where you're standing chest to knees. So what that means is for the AI to work, they needed the exact heights of every single player so they could create the strike zone. So basically this year, as you could imagine, players who are 6'2" are actually only 6 foot. So again, unintended consequences of using AIs. Now all of a sudden we actually have the legitimate heights of every baseball player.
Oh gosh, that's so funny. It's funny how people have made up their heights for a long time. Like some people have made themselves taller. Shorter, and then isn't it like Kevin Durant in the NBA that's actually made himself shorter because he didn't want to be seen as too tall. Otherwise he'd be placed in it. Placed as a center. God, that's quite funny. I wonder how many people have wonder what the worst, most extravagant measurement is.
It'll definitely be cool. Definitely someone that was trying to make themselves over 6 foot for sure.
Definitely around that milestone. I wonder, actually, the baseball one seems to be pretty, like you said, pretty unanimously positive. Has there been anything that's come into the market that quickly that you can think of that has had better impact, or at least as good an impact? And I'm really struggling with some. I mean, there's different things that happen, not necessarily decision making, but like things like the first down line in the NFL. I used to love the when they added the visual graphics overlay for swimming. where they
Yeah.
would have like the line of where the
Yeah.
world record was that they were trying to, or the fastest time that they were trying to catch. That was kind of cool, but it wasn't decision
Yeah.
making or judging. It seems like
Yeah.
football has not worked just at
No,
all.
VR is too slow. I think it's when you try to put objective processes to subjective things, which are
Yeah,
difficult. Where offsides, like, yes, we still quibble about it, but like it's very clear what the rule says, and you can judge it. I'm trying to think if there's anything else. Like I said, the NFL has gone through all kinds of things. If you remember the Des Bryant, what is a catch versus what isn't a catch,
oh yeah,
and then there was the Rams Saints Super Bowl where that's where they initially introduced you could challenge pass interferences. Do you remember that? Where the Rams went
yeah,
on to the Super Bowl because there's just an absolutely egregious pass interference call.
yeah,
Um,
yeah, yeah.
so they came out the next year and said you could challenge pass interferences, and they're like, actually, this is terrible. Like it, because your point, you could find it every single time. So I can't think of something that's been quite as seamless as what baseball's done with the automatic balls and strikes this year.
Yeah, well, if anyone listening and knows of any, give
Yeah,
us a shout. Give us a
yeah,
shout out. We'll mention it next time on the next recording
yeah,
we've got. But I think that seems to be as good as it gets. It definitely has
yeah,
added a lot of value to a lot of sports. But yeah, like you said, that subjectivity. I think one thing that was quite good. I don't know about they did this with football, but in rugby, you got the full commentary conversation
I
when there
love
was
that.
the
I love that.
TMO, the third match official, I think it
Yep,
stands for, and that was so good. It really just
yep,
gives you the context. That removes some of that again, that unknown as to how a
yeah,
decision was made,
yeah,
or at least the thought process, and gives you more comfort, even if it's subjective
yeah,
decision making. More comfort that
yeah,
it's been assessed in the right vein. I think that's probably a good example. But I don't think the Premier League or the most football leagues
yeah.
mic up
Oh,
all the
I don't
rest,
think
do
they
they?
do. No,
No,
no, I
probably not
agree with you
because of
though.
what will come in at the other end.
Yeah. Yeah. I agree with you. That is a great example. But we will shift things, Nick, and we're going to go through some news stories. I think one thing, though, maybe just to frame it, some of the interesting things about these stories, Nick, is we've talked quite a lot about media rights and private equity investment, where people are putting money. It's been towards media rights, which we've talked about, and you've been banging the drum on, like media rights might not be the best investment. Well, this week we're going to cover some stories, but it seems there's a little bit of a shift. There's more of a towards, not maybe a huge shift. Investing in technology is not a new thing, but like the DAZN taking over ViewLift isn't necessarily about technology. We're going to talk about Bruin Capital and Matchroom. It's sort of slightly different, more about the market space, the technology, the infrastructure about it. And I think there'll be some other stuff that we'll talk about over some future episodes, teasing some things in the future where kind of this idea of, where the value is. And just, I think it's a bit interesting, some of these stories. They're not just straight up media rights stories, although we might talk about a few of those too.
Yeah, I mean, a lot of these deals we're seeing in the market outside of the real traditional PE investment. We haven't seen a lot of PE investment into the term that's been making the airwaves now, the picks and shovels style businesses. Bruin Capital was one of the forefront of investing in decent size, mature, but with growth opportunities. Picks and shovels businesses, basically businesses servicing the industry rather
Yeah.
than what most of the headlines is just about buying a team or maybe investing in a new league or alike, and that's kind of been it. So that's kind of the next obvious iteration in a marketplace like this. There it moves from, which is what is a very limited marketplace in terms of like investing into teams and or leagues, particularly mature ones, to well, what companies are servicing this space and how do I get a part of it? So not too surprising. I think it feels like it's the next stage of investment is to look at that. And actually, I think that's healthier for the industry and indeed healthier for investors to take that approach, where I think, venture capital style mindsets work more effectively for service-led businesses than it does for teams and leagues.
Exactly. So we'll go and switch that straight into the first story, where we'll talk about Bruin Capital, run by George Pine, someone I think we've talked about multiple different times. We've actually had him at our events. I think whether he's been a guest on Streamtime Sports or whether we've redone one of his interviews, I'm trying to remember, Nick. We've done so many of them now, Nick.
I've done a couple with him. I've done at least one on the Sports Pro channel on the How to Win series I did with him. I think I might have done one with him on Streamtime a few years back, given some of the stuff they were across at the time. But definitely on Sports Pro and the How to Win. I think that's available on YouTube if you want to check out George Pine's views on things.
Yeah. Well, we've given him a lot of credit for the moves that he's made, when they make the moves, when they exit out of things. But their next move is into Matchroom Sports, someone we've covered from the things they're doing from the boxing space, some of their associations with DAZN. I've mentioned many times, the World Darts Championship is probably my favorite thing, which is also part of Matchroom. They also do things with pool snooker, I believe is the term over here. But Bruin have acquired a 15% stake in Matchroom, and they've valued it at £1 billion, which is, a good number to have that valuation on. The Hearns, Eddie and Barry will still run things and have the majority control. There's over 600 event days per year. Obviously, there's only 365 days in the year, but they obviously have multiple different sports properties. You match those out. 2,400 hours of content annually in terms of what's being produced across all of those different events, that they're covering. They are looking at expansion on U.S. sports. And so, Nick, I guess the question here is kind of talking about, I think, kind of a transition of investing in just media rights to potentially looking at someone who's I guess you could say the intellectual property aggregators, the promoters. Is this a shift in sort of that thought process about where there's value to be investing?
I would say if it wasn't for the fact that it was Bruin Capital coming into this picture, I would have thought maybe there's something in the air here. But in this instance, Bruin has been investing in these types of businesses for quite a while. They've been really the market leader in taking this sort of approach in what they spent with Two Circles, previously Delta Trade before. There's something with a T that they've invested into. It's a 3-letter initial company that is behind the scenes as well. I should know that. But anyway, they've invested a numerous amount of companies that are servicing and powering the industry. And there's a couple of benefits for that, right? Obviously, the growth opportunities that comes with those investments, but also the cross pollination of opportunity between those different companies that they're able to create. And also George has got a really impressive black book, and I'm sure I would bank on Matchroom announcing some pretty major deals or partnerships in the US off the back of this that they've been able to help bring to life. But Bruin's in a really good place and have got a really good track record, some great investors behind them. This is all part of their latest fundraise, which I think was something like $1 billion, I think was the number that they had raised in the latest funding cycle. So I expect to see a few more major investments in pretty interesting and relevant companies that people would really take note of.
Yeah. Now, Matchroom does have a good presence here in the UK. Like I said, between what they're doing from the boxing space, Eddie represents, Anthony Joshua and other famous boxers over here. We mentioned how popular the darts is over here. Snooker is very popular over here in the UK. What would success look like potentially growing in the US? Because I'm sure if Bruin's making this investment, there's expectation of growth. I think part of that's going to have to do in terms of, internationalizing some of the sports properties that they do have.
It's a really good question. I'm not really sure what the actual play here is. There's a few scenarios that could be a play. One is to firstly diversify and expand the events base of those sports that they already have in their ecosystem and portfolio in the US itself. Greater marketing of snooker, of darts, and so forth in the US, which would be a very exciting proposition if they could really grow those respective sports and sports properties in the most lucrative media market. That's one thing that I think is potentially a route of play. Matchroom's been trying to expand and diversify for a while now. They recently announced some basic athlete representation with rugby players. Is this just the beginning, or is this just like a little bit of an itch that's been scratched, or are they really going all into this talent management thing? Because the point around like even the boxers, like for example Joshua, they weren't actually representing them. They had deals with them for fights where they would promote and get them a deal for the fight and share in the winnings or the profits and proceeds off of that. The newer announcements is much more about more traditional athlete representation. So I'm intrigued to see if they really double down on that further, and whether they're known basically as a boxing business first. I would say I feel like boxing's in a bit of a volatile state, so I'm not sure whether they've have a bit of a path or a strategy to bring that to life again, or they are really going to focus on other areas.
Well, with darts, and this probably won't surprise you at all, Barstool Sports loves Luke Littler. But you could see where people like Barstool Sports, Pat McAfee, would totally love the idea of what darts represents. So I think that's where I see the amount of coverage you see from the Barstool guys being Luke Littler, 18-year-old. You can sort of see where that type of crossover between entertainment and sport, particularly with some of, like, to be quite candid, like Barstool is, although they're not a traditional sports media business, they have an incredible impact and reach, similar to Pat McAfee, who's gone from just his YouTube channel to now being represented on Disney and ESPN. You could see where that kind of stuff, with the right type of audience, with the right commentators, that kind of thing blowing up potentially, more so.
I like that. Like that angle. I think there's something in play there. I mean, historically, Matchrooms really, they put a lot into like owning the IP and the growth of the assets they've been creating versus just acting like an events and promoter agency. And I think it's an important distinction because they've been building their own assets as a result of that. Now, whether they'll change that model in the US because they want to sort of tap into perhaps also like the challenger sports marketplace, which is quite strong in the US. Maybe there's a way to partner up with some other sort of challenger sports and sprinkle some Matchroom stardust on the promotion and marketing of those events. I'm not too sure, but a lot of opportunities. I think. Question: have you seen the Hearns documentary series on Netflix?
I have not. That's because I currently don't have. I've basically been kicked off my family Netflix account. We can go into subscriber issues and things like that, but I have a list of things when I go home in I'm going back home in about a month's time to bring my son back home. When I'm going to be up in the middle of the night because he's going to be so jet lagged and crazy, like, there are a list of things on Netflix I need to go watch.
Well, it is a good series because also there'll be a lot of people that you will recognize the names of or the faces of in that always makes it a bit of a surreal experience when I've met some of these people that you see on the screen
Nice.
on Netflix. But one of the aspects of that is there's a real heavy connection to Saudi Arabia, right? Because of PIF and because of the investments they've made and because of the events they've been bringing, and Matchroom were really and it's very visible in this documentary how close they were working together. I wonder about the timing of this deal. If obviously the recent announcements of PIF looking to wind back Live Tour investment and more widely as well, whether this was not a reaction necessarily, but an alternative approach they were considering, basically, given that they were cozying up to PIF and the Saudi money quite a lot, and it's invisible in this documentary series. It's quite interesting, really.
Yeah, I'll check it out. But moving on to our next story, Nick. Here in the UK, Sky Sports has extended its Formula One deal across Sky Sports. So it's extended until 2034 in UK and Ireland and 2032 for Sky Italia. It's $1 billion deal. It's a 55% increase on the previous deal. One of the things that's interesting about this, Nick, and kind of the reason we're talking, is one of the things that's unique about the UK is the lack of the ability to have F1 TV Pro. And it's interesting because while it's probably good news for Sky to be able to continue to lock in a long-term partner that brings people in, and I'm sure Formula One enjoys having the increased revenue, it seems like there's some mixed reaction from the fans. And I think a large part of it is the exclusivity with which Sky holds. And I can understand from Sky's perspective why they want to be the exclusive home of it. But it also feels like in a world that is quickly moving more towards D2C relationships, that exclusivity may not give fans in the UK that full-on experience that they would like to be able to access with F1 TV Pro, which is accessible in other marketplaces globally.
Yeah, I think I raised this actually when the deal was secured last time. I went on. I was I had a bit of the F1 bug. I think it was maybe a bit of the Drive to Survive effect. It was some of the action on the track as well. And I went, all right, I'm going to look into actually subscribing to F1 as a standalone product. And it was quite expensive, but I was like, you know what, I'm probably going to do it. And then I tried to do it, and then no, you've got to be a Sky subscriber. And the problem is I wasn't a Sky subscriber. So now the question I've got to ask myself is, do I want to lock myself in to a product which is more expensive, and gets way more value than I need or want? But no, it's not easy to break those kind of Sky Sky kind of contracts, and I really struggled to justify it to myself. So I ended up not going down, signing up for a subscription, and now I haven't watched much F1 at all. So there was a window there. I think this is indicative of a bit of like audience behavior, right? It's like you have a window with someone who's consuming where you have a chance to really hook them. And if it's the friction is too strong, you might just lose them. And they lost me as a result of that. And I haven't really paid much attention since. And I had this psychological issue where, like, I'd rather just pay a lot more money for one product I'm 100% interested in than pay a little bit less money and get lots of stuff that I'm semi-interested in. And this is the psychologies of bundling and pricing that makes it so challenging in this day and age. But yeah, the feedback I looked on, like Twitter and a few other channels, was quite negative to the exclusivity that Sky holds on it. And because I think they want that full bevy of F1 TV Pro stuff, and I think there's just a bit of it missing in the Sky offering. And it's worth noting that Sky actually do a lot of the production, the broadcast production for F1 that gets broadcast across the world. They're not just hosting it on the platform. So there's a real solid relationship with F1 with Sky, that's for sure.
Yeah, I think, to my knowledge, we try to compare it. I believe you can get NFL Sunday Ticket without being a subscriber to YouTube TV. I think it comes at a slightly more premium price. It is not more expensive than being a subscriber to YouTube TV and getting that, but you could pay for it as a one-off package. And you almost kind of wonder.
Same with Game Pass as well, and DAZN as well.
Yeah, it's just sort of, it's interesting that there isn't some way, added as a premium cost to have Sky without doing the additional full subscription. It's just, that is one of the interesting things that come up with this, where, like I said, we understand why it works for Sky. We understand probably why it works for Formula One, but there is it feels like, in a world where there's more direct to consumer products being launched all the time within, would you probably argue, Formula One's key market. I know they want to expand in the US, but UK's got to be one of its top markets, if not the top market. Not giving them access to that premium product.
Well, yeah, most of the teams are based in the UK. Its roots are UK. It's so solid in the UK market. It's definitely, I don't know which market is stronger. I'm sure there are others that are pretty similar in terms of scale and interest, but it's a really solid market, and the economics kind of prove that. And Sky has built a really solid business off this, arguably, well, probably the number 2 after the Premier League in terms of the single sports relationship that drives the most value for them. So it's definitely an important one. I think Sky would need to really think about, can they rethink that deal at some stage? And maybe they might in the future, where F1 TV Pro is available actually, and it's all linked with their subscription, a bit like a cable deal, where basically I've heard a few of these examples where in the US, ESPN, with their ESPN is a flagship or whatever it's called, you cable subscribers are getting access to the ESPN flagship app for free as part of their cable subscriptions, because they want to try and hold on to that cable money for as long as possible, rather than try and push people out of the cable bundle and into ESPN, because that's actually a very difficult journey to create. And I just wonder whether here, whereas if F1 and Sky partnered up and they said, look, what you'll get is you'll get free access to F1 TV Pro on top of buying it through Sky, I think you would see a transformation in that relationship with fans. That's for sure.
Yeah, it's an interesting one, Nick. And I guess the other question becomes, this deal they renewed 3 years prior to its expiration, so it was quite early. And the other thing that we know that is happening this year is Apple is now the new home of Formula One within the US. Now, one of the things we've spoken about with Apple and Netflix is a lot of their deals prior to this were global. Now, Netflix have obviously done some stuff with the World Baseball Classic, specifically to a single market. But, Apple previously with the MLS deal was a global deal. Do you think there was any potential just concern with Apple being involved? Sky felt the need to renew early because they thought, if this is successful for Apple, does this become a competitor for us that they might want to do a global deal? It's just, I'm not saying renewals don't happen early often, but sometimes you just got to question why.
Well, particularly because this is it's an 8-year runway to the end of the deal in the UK, and 6 years in Italy. Remember the days that in Europe there was no deals over 4 years?
Yeah,
I think people are just ignoring that European Union issue anymore, because there was precedents basically opening up the door to that. I think there must have been a bit of a concern or a bit of a question mark as to, will Apple start to double down? And after a year or two with F1, they'll have a pretty good indication as to how forthcoming the audience has been to access F1 through their own channels in the US, and seeing if that transfers. Now, if I remember correctly, wasn't F1 TV Pro also available basically for free as part of the Apple subscription? If you're an Apple
that I don't know for certain.
I'm not sure about that last point, but they basically made some of the premium content that you would normally think you'd pay extra for actually included in the Apple proposition. So it'll be a very different kind of business model and approach should Apple partner up with them. But now they have to. There's enough runway here that Scott doesn't have to worry about Apple knocking on the door anytime soon. So probably definitely protects their one of their main assets, and they've been very good at that over the years.
Yeah, and they'll have to be because all these streaming giants are coming into the space, grabbing up things that traditional broadcasters had, which segues us nicely into Disney Plus now entering the game when it comes to UEFA. I think, Nick, we mentioned within the Nordics that they had acquired some access to some of the UEFA competitions, if I remember correctly.
Yep, Europa League and Conference League it was at the time in the Nordics, yeah.
Correct, but now they're looking at getting access into the Champions League across 19 different markets. I believe Sweden is now one of them, Nick. So that's what I see in the store. So there you go, you've got access because I'm sure you have Disney Plus for the kids. But it also includes markets within Mexico and other parts of the Americas, Latin and South America. So now they've got close to, I think with all their new deals, it's about 775 million euros across 19 markets, would represent a 40% increase in media rights values. But it's largely seeming to be split between Disney and Paramount for the most part outside of the UK. But I guess, Nick, one of the interesting things here is, again, we just talked about these global deals with people. We've seen it with across the board with UEFA fragmenting the rights geographically. Is there a reason why? I mean, is it just simply getting as much money as possible? Is it benefits to being split across and having fragmentation? It just the 19 different markets. I mean, there's really two competitors, but could they've just gone for a global deal? Just an interesting process of how pick and mix it is a little bit.
Yeah, it's definitely pick and mix, and Disney obviously wasn't. The Champions League generates a lot of revenue for media rights, and Disney no doubt weren't ready to go all in and create a global deal, and quite frankly, probably weren't able to do it because of the different types of deals that exist. And frankly, the Champions League going fully into Disney in a lot of markets would have upset a lot of fans who may have been consuming it through some places free to air or a very mature streaming partner, or just or a mature commercial or cable network. That would be quite a bitter pill to swallow for some people if that was to play out, given Disney is a very prominent brand, but I think it's in certain markets it would not be that strong, really. Obviously, there's a certain type of person that might be more prone to having Disney. Disney has really diversified the platform since, but the interesting thing, part of at least in the Sweden side of things, is it is under the ESPN brand.
Yeah.
Which just goes you wondering, well, what's the plan here? Are they going to have another crack at launching ESPN in Europe now? And given the ease of which they can integrate a new brand and IP into the Disney Plus ecosystem, I think they might be really looking to do this. Now, if so, then again, it's one of these things. But Disney all of a sudden have a dedicated sports brand in market. That means they could be seriously in for a lot more rights to come.
Well, that was one of the questions I asked Brian Marshall when we were in New York with the launch of the new ESPN D2C platform. What would that mean internationally? Because so far, a lot of that stuff has been focused in the US. And he said, hey, we're always thinking about things going internationally. And he doesn't necessarily work in the media rights team, but how those packages or how those products would all interact with each other. It does seem, if you're going D2C, that would be a logical move to build that brand. Because as you say, I think even if ESPN isn't in your home market, this isn't me trying to sound like an American homer, I imagine most people probably still have at least heard of ESPN because it's just a pop culture reference at this point.
Yeah, I think people identify the brand, which helps, and that's probably why they're sticking with it and they're trying to give it a go. And I'm still a bit confused about Disney as a brand for an app, which I still think most people, at least around my age, will immediately think of Disney as nothing more than a kids and cartoon brand, basically. I mean, the best in the world, but still not what they are. Actually, go on the platform, they've got a whole incredible array of entertainment content on the platform. It is really good value just for the breadth and depth that they have on the platform, not just the kids stuff alone. So I mean, they're setting themselves up nicely, basically, to make a bit of a play. But the use of ESPN as the brand has really, I wouldn't say it's confused, but it's left people just a bit wondering, are they really going to do this now? Are they really going to bring ESPN back into the fore? And But I think timing's much better than it was previously, where
Yeah.
there had to be such a big commitment previously to if they wanted to launch a sports dedicated product. And Disney seems to have better alignment now on how they want to build the Disney Plus streaming proposition with what they've done in the US with Hulu, Fubo, and on ESPN now. That they've just got a nice, much more complete proposition that I think is looking more and more like Netflix than anything else.
On a more macro level, does this move in terms of Disney, Paramount all getting involved, does that signal or validate that streamers need premium sports to drive subscription and keep retention, or that this is a product that sports needs to facilitate competition to inflate its media value?
Or probably a bit of both, I think. And
Both,
that's
yeah.
why it's a bit of a perfect storm
Yeah.
from that perspective. I mean, look, the growth of the investment, what, plus 40%, is a big jump. I mean,
Yeah.
two of these deals now we've talked about had massive media rights jumps. I remember we've done a lot of presentations where we've talked about how flat media rights are in the UK and Europe. Well, it seems like the market's picking up again. But obviously that is because there's some streamers willing to pay premiums to come into the market now. They weren't really ready to make that investment, but now they are. And now they're going after some pretty premium brands and IP to get a grasp of what is a fairly mature marketplace. So, I think they need each other, and that's kind of why it is, I guess, working and driving a bit more competition for rights again. Again, really at the top tier. Champions League rights are top tier in Europe, and that's why they've been willing to spend. I think there's an interesting nuance with Champions League rights, like of who would want to watch what. So in Sweden, for example, I know a lot of countries, like the Premier League is so strong here. It's so strong in terms of the fandom. I see, anecdotally, I see more kids with Premier League shirts than I do with Allsvenskan shirts, the National League here and the local teams. So in things like the Champions League, then you're looking at this interesting mix. Well, there's actually not many Swedish teams playing in the Champions League. I don't think there's any this year at the moment. Probably only in the Europa and Champions League, I'm guessing. But they do watch the Premier League. So again, it's. I don't know how much interest will be watching a mid-tier Champions League match with no UK or Swedish clubs, but some of those, I don't quite know what they're buying, but they're going to get a very eclectic mix of content that's going to engage different audience sets. That's for sure.
Yeah, fair. Well, I mean, we talk about some of the shirts. It's just having something for everybody, because like the family's all going to be mix and match sort of thing. I mean, at least I talk about my onboarding sessions with new starters here. Sports will keep dad happy, but the kids' entertainment will make sure mom will approve of the subscription. At least that's how it works in my house. My wife's the CFO.
Well, I think the number looks really big, right? 775 million across 19 markets. But then you break it down per year and the amount of visibility they've got. It is a big investment. They've spent a lot, but for someone like Disney, this gives them a real chance of testing the market again for something like this. So I think, and to build that sort of family full suite of sports and entertainment again, to see if there's any interest in that. So, I mean, for us, it's really good when there's a lot of competition in market, because there's a lot to talk about. So I'm all for it.
Yeah, absolutely. Now, a story we alluded to earlier about this idea of acquiring businesses and media rights came out a little bit ago, but we're just now getting the time to come around to it. It was DAZN acquiring ViewLift. And I think on the surface, there's this idea ViewLift is basically a platform builder developer, helps people build their own D2C streaming platforms. And there might be the view that this is something about, DAZN is looking at building out their tech stack, adding more capabilities, which I'm sure ViewLift is going to be able to play a part of that. But I guess the interesting part of this, Nick, is the fact of the relationships the ViewLift has in terms of, I think it works with, 15 different teams. It works with 5 RSNs. We're not going to go deep into the RSN space here, regional sports networks in America, but they're obviously trying to figure things out themselves. And it's the existing relationships with it. It almost reminds me a little bit, not exactly akin to the IMG Arena deal, where they were paying someone to take the rights off of them. Was that Stats Perform or Sport Radar who acquired them, Nick?
Sport Radar.
And it wasn't, the tech helps, but it was about the access to the media rights. So I guess, Nick, what's interesting to me is that there's what it appears on the surface as to who ViewLift is as a company, but actually sort of the strategic play, potentially helping DAZN get greater ownership of some US-based media rights where they're looking to try to develop themselves. So I guess can DAZN win in the U.S. by I guess being the plumbing rather than the destination, if that makes sense.
Yeah, I'm intrigued to see how they play this out. So, like bringing ViewLift into their business does give them. Look, when we talked about ViewLift across the industry, typically we would put it in the same conversation as an Endeavor Streaming or a Delta Tray or those
Yeah.
types of OTT style providers. But in the US and in other markets, we've seen how the deals have had to take different shape, where basically they are almost a media rights kind of deal. There's certainly like a minimum guarantee commitment from most partners. That means they have to understand the rights market and audience dynamics to make those sorts of commitments. So it's tricky for anyone in this market to do a deal for a platform. It's not just a service agreement between two parties. And in the competitive market like the US, that's especially prevalent. Now, ViewLift has done a really good job. Their roots are originally from Monumental Sports and Entertainment. So from what the Washington ownership group, Zach Leonsis, I think we've had on the pod from previously.
We have.
So they've come from that. They've really shown that they can build destinations, branded IP-based destinations for either for teams or for the collection of teams. You've got like the New England Sports Network, Monumental. I mentioned Altitude as well, which I think is the collection of the Denver based investments from the ownership group there, and build out an ecosystem. It's not just an OTT platform as a standalone. There might be the visibility on smart TVs as well, but it's very much creating a destination to point people to. So yeah, what this does give DAZN is DAZN changed its approach a few years ago, and we've covered it basically where they took, for example, the NFL Game Pass deal is the one I point to, where they took the Game Pass, they shut down the legacy product and ingested it and integrated it all into their own ecosystem. From what I can tell, they had to build it from scratch almost, but plug it in and then migrate users across. This model, bringing ViewLift, gives them the capabilities of actually allowing that still to stand alone as it was and not have to migrate it in to maximize the value of that potential business opportunity, or do both, build both a Game Pass product in DAZN's platform, but also keep it standalone, owned and operated by them, which I think is a much, much better play given what we just talked about, for example, with F1 and Sky. It sort of removes that predicament, yet still gives them all the control, and they have the expertise on platform development, they have expertise on the marketing, etc., that they can hand the keys over to someone, and or that someone can hand the keys over to them, and they can get to work. So I kind of think it gives DAZN much better access and positioning in the US, which they've been craving basically since day one, and B, it allows them to create a much more diverse and, quite frankly, a better and more holistic proposition to partners who otherwise had to sacrifice something to do a deal with DAZN, whether they would put it that way or not.
Yeah, and I guess the other thing, we're not going to go deep into the RSN space. There are experts that we can bring in to talk about that. But I guess one of the interesting things, and thinking about it from a DAZN perspective, does the impending collapse of RSNs potentially make local rights deals perhaps some of the most undervalued assets in sports? Because I think, looking from a DAZN perspective, they're not going to be able to get that big massive deal with the NFL. They're not going to get the big exclusive deal with the Major League Baseballs and the NBAs of the world. But Major League Baseball, NHL, NBA, they all have local media rights deals, which obviously come at a slightly lower price point. And I think that's part of the interest of them with the ViewLift side of things. But does that just make that whole local media rights space perhaps something that gets, I don't want to say swept under the rug, but isn't maybe as flashy as we see with some of the big national deals?
We've got to put in perspective, like, some of the size and scale of some of these RSNs.
Yeah.
Like, let's think about some of the states that they operate in. Like California is like 40 million people, right? It's nearly the size of England in terms of scale. So think about that's the type of RSN, that's the top end. Obviously, there's much smaller states that also have various regional sports networks that might work across a multitude of some of those smaller ones. But they're not smaller businesses. Sometimes we talk about them in a very lackadaisical sort of, they're these little small guys on the side, but actually some of them are quite big properties and have really meaningful reach. I don't think it's under monetized from what I've heard from some of the earlier movers around baseball, around in basketball, that have had to move early on, taking a different approach because of issues that have played out with partners or with Charter and Diamond Sports Group and alike, they are struggling to get the money back to the levels they had it before. So actually they were over leveraged. Perhaps the rights were being paid were too high in terms of the value that was being paid for them. And now take crafting out their own path, whether it's with a ViewLift or a like, or just themselves, there's a big margin that they can't overcome. In the same way we've talked about basically what's happened in France in Ligue 1, similar sort of situation where the premiums aren't no one else is willing to put that check on the table, and the fans aren't there enough paying the premiums that they needed to bridge that gap either. So it's a bit of a tricky, precarious situation. There's got a lot more disruption to come in the US as a result of this. It means it's way more activity in there in terms of like deal making and rights values going up and down and so forth. But from what I'm hearing is there's huge pressure on this. Again, a bit like we've talked about in Europe, it's almost like the other way around. It's like huge pressure on some of these because the local rights values are probably going to drop right across the board.
Yeah, absolutely. Well, the last story we're going to talk about, Nick, it is one, there's been a little bit of smoke, but I don't think it's officially been announced, although bits and pieces of it have been announced. When there was merger acquisition between, I'm not sure the exact word, between ESPN and NFL Network, that freed up several games that used to be broadcast on those networks. It has been rumored for a long time that it was likely that YouTube and Netflix would be the leading players to acquire some of those games and expand some of their coverage. So last year was the first time YouTube had ever broadcast a game. They did the one down in Brazil that was the Eagles, and they did someone else, Eagles and Packers. I remember that because the local gangs down there, one of them was green. It was a bit like, don't know why you did that. But nonetheless, that was YouTube's first time doing a game. Netflix has done the Christmas games, but this will be expanded coverage. It's already been announced that Netflix is going to do the game that's being hosted out in your home country, out in Australia. And it appears as though those other 4 to 5 games that were previously available are going to be split across YouTube and Netflix. So I guess, Nick, the question here is, for me, what are Netflix and YouTube actually buying here? Because they're not doing these large deals. You know, Netflix has done the Christmas stuff in the past. YouTube's done that one-off. What are they actually buying here when they're just picking and choosing these small little selections? You know, the rights value, data, is it positioning for a future bigger deal? What are they actually buying?
Well, Netflix, we've talked about before that Netflix is very much in this event-based style rights that they look to acquire, particularly in sports. They aren't after season-long deals. They want people to get excited and energetic enough to acquire or tune in to basically their broadcasts by something special happening on the platform. That's been their approach for some time now, and they seem to continuing on that path for the moment. And also, you know, their advertising business is growing, skyrocketing. I can't remember the number that's all, but it is more than doubled in the last 12 months, I believe, from memory. And so they've got a nice, well-oiled machine on the advertising side that they can turn these types of events into a really solid multi-revenue stream acquisition and retention tool for its subscriber base. So for Netflix, it's not surprising at all, particularly if it's 1 or 2 games. They can do a lot of marketing around it and maximize the value of that opportunity. With the YouTube, I mean, we left YouTube's efforts last year wondering sort of how successful was it? I was really intrigued to see some of the numbers. They had some issues with the counting of them at the time. Their initial ratings they shared through Nielsen. They did a hybrid approach, but appeared to be close to what a typical streamer would do, but they were also doing it internationally and it didn't do as well. They didn't share anything with regards to the creators that were doing their own broadcast, and that kind of just disappeared. I thought they were doing that basically as a case study to say to other sports, look, we've done this. We've spent money on this. We've sold loads of advertising, made lots of money. It was worth it for us. Rather than saying we're going to commit to buying more and more media rights. And obviously they have the secondary opportunity of marketing their Sunday ticket product, which gives them a nice direct acquisition tool that they can use other than just monetizing off the broadcast. So I've been wanting to see what they would do next on that. They were very quiet on that front since. So maybe they've worked out an alternative approach. Maybe these deals aren't going to cost them as much as well. It's hard to tell, but YouTube's certainly not backing away from trying to put its flag in the ground of live sports being on the platform. That's for sure. And the NFL's basically seems to be their number one sports property that they're looking to work with and shake up the marketplace with.
Yeah. Now, one of the things the NFL is already talking about ending some of its previous deals early, but one of the things that we really talked about early on, back when this podcast first started, was like, hey, the reason the NFL's done this is because they've got these big, long 10-year deals. It gives people a long runway to invest and security, and having that. Do deals like this actually maybe indicate that the NFL maybe doesn't like the 8 and 10-year deals, or that it wants a balance of 8 and 10-year deals, but also has the flexibility to continue to reprice their inventory year on year?
Some might call that a little bit greedy and having your cake and eating it too. Getting $110 billion committed to you and then wanting more of it. But, when you're the top dog, you're the kingpin of sports and sports rights in the US, you can do what you like, basically. And they've, it's definitely created more conjecture and uncertainty in the market place, because there is this conundrum, right? Like, these major broadcasters have built huge businesses off the fact they have the NFL, but at some point the economics really struggle to make sense, particularly if those values continue to go up. Like, how can you sell billions of dollars on a couple of games if that's all you've got on your platform, if that's the ask for advertising? There is a certain ceiling that does exist in these situations. I think I've even seen there was reports. I think Roger Mitchell shared it actually on LinkedIn, and take me into it, which was about Rupert Murdoch was lobbying Donald Trump. I think you might have even posted on that, if I remember correctly, on that post or another one. So like it's a big deal to be really pushing these guys who spent record investment into these rights, with the benefit of having that longer runway and kind of like just being allowed to work it out as streaming takes hold. Is that, well, actually, we can see now, and the NFL's like, we can see what the future looks like now, and we like what we see, so we're going to try and go take another approach. But I'm sure there'll be a lot of lawyers involved. Yeah,
and before I ask this last question, I will just frame it with a reminder, because we talked about the lawsuit a couple weeks back that was raised. 87% of their games are still on free-to-air coverage. So, like, just to be clear, when we talk about this, it's still, because this is when I kind of gave my soliloquy about it's not about fragmentation, it's about accessibility. 87% of games are on free-to-air. But the NFL is arguably probably the most fragmented sport I can think of in the moment. When you think about all the national broadcasters, then the different deals they have with Netflix and YouTube, and then Peacock's got some exclusive games. Then they've got their own D2C products. YouTube TV has its, it's incredibly fragmented. So the question is the NFL unique in its fragmentation, and that it's the only sport that, like, people would hunt for these things? Could anybody else be this fragmented and still have success?
The answer to that last question is no. I don't think anyone could be as fragmented. They've really, that positioning on the broadcast is really fascinating, right? 87% is still available on broadcast. It is, but it kind of isn't. Like, it is because the local markets have access to it. Typically that's done through broadcasters. So local market visibility is really solid, and that's important, right? Because a local fan should have access to it, and they do make that available. But I think they're in an okay place. Like, you can get access to it if you're a really big fan. You know, access to Sunday Ticket. Your interest levels in other teams playing, if you're a massive Philadelphia fan, is not as strong as others. So when it goes on to different platforms, it's a nice balance of marketing and new opportunity for those games to be made available. But the NFL has made Monday Night Football, Sunday Night Football, Thursday Night Football such a big deal. It's it's like it's got a spot in everyone's calendars, basically, from a fan perspective. So when you start moving it into these different environments, you do take off some of that edge, I think. But who am I to judge the NFL's approach? They keep cashing in, people keep tuning in. The streaming numbers we've seen out of Netflix and out of Amazon are on par with over the air. So I think we're basically getting to a point now where, whether it's broadcast over the air, it won't really matter. As long as local markets get access to the games they need to get access to, we'll be fine.
Yeah. Well, Nick, that wraps up all the stories that we have for this week. It was a pleasure as always. You're going on a little bit of holiday. We are getting into that season, so I hope you enjoy your time off. But we will catch everybody on the next episode of Stream Time Sports.
Hopefully, I've got some good stories to share on my
Yeah.
my golf holiday, and I just got a message from my uncle saying he got a hole in one. I've yet to get even close to that, so no pressure. But I'm going to look for a hole in one this weekend.
Well, I wish you the best of luck, Nick, and I hope that's a story I hear.
No, so thanks, Chris.